What is up, investors, and welcome back to the Everything Crypto Show. I'm your host, Everything Crypto, here to bring you the latest and most important news moving the crypto markets. Now, as always, please remember that nothing on this channel is financial advice. These videos are for viewer education and entertainment purposes only, so please invest responsibly as I want this community to thrive in the long run, and I love and appreciate you all. And on that note, we are back from vacation. We are getting back into the regular crypto market updates, and there is a ton of stuff to cover today, including some on-chain data and upcoming events that lead to a potentially very ugly Q4 for Bitcoin and the rest of the crypto markets. USDT finally responding to the tornado cash situation and whether or not they are going to freeze Ethereum addresses just like USDC. We have some more Crypto.com platform upgrades as well as very important updates on both Celsius and Voyager. So tons of stuff to get through in today's video, and without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Friday, everyone. I did just want to ask that if you've not yet hit that sub and like button, please consider doing so, especially if you are a crypto investor, as the number one goal here is to bring you all the news that you need to know on a daily basis. We are also going to start up with the Sunday Q&A streams once again, so leave your questions in the comments down below and tune in Sunday morning at 9:30 a.m. EST, and I will be answering all of those questions live. So with that, we are going to hop into the crypto market update like we always do, taking a look at the Bitcoin and Ethereum charts. Now, we did make a video last Wednesday while we were away, more of a warning video really, as I did see a dump incoming for Bitcoin, and since then we have sold off from about that 23.5k level all the way down to about 21.5k, and the reason I kind of saw this dump incoming was because we have the S&P here coming in at some major levels of resistance. We have the NASDAQ here, which is still down about 20% from its all-time high, and then we have Apple stock only down 5% from its all-time high. Now, in my opinion, there is no reason for Apple stock to be hitting new highs. Their margins are getting crushed by inflation. Their business in China is hurting from a strong US dollar. I do expect Apple stock to roll over and come back down to that 157 level. And if that happens, the S&P and the NASDAQ will follow suit. And that means Bitcoin will also move to the downside, as there is a correlation between the two. Now, the other technical indicator that is suggesting to me we are in for a pretty ugly Q4 here is the US dollar, which has really just ripped above a nice level of resistance at 107. In fact, it looks like we're going to come all the way back up here to these .com bubble levels at about 120 on the DXY, and there is an inverse correlation between the US dollar, as if the dollar goes up, we are effectively in a risk-off environment, which means that Bitcoin will sell off. So taking a look at Bitcoin at the moment, we are below the 200-week moving average. I would expect us to come and retest that $20,000 level in the coming weeks, and do be warned that if we break below 20,000, 15,000 is definitely on the table. We've already broken below our 2018 all-time high, so at this point, to see a $15,000 Bitcoin in Q4 would not surprise me at all, and I am preparing cash just in case that does happen. And then taking a look at Ethereum, we did also call out a trade here once ETH broke above this strong level of resistance at 1730. I did say that we'd probably come up to $2,000 and get rejected, and we did get rejected cleanly here. We double topped on these 2 weekly candles, and we are now back below that $1,700 level. I would expect if Bitcoin wants to fall to 20k or lower, that ETH will definitely want to retest that $1,400 level, which is its previous all-time high. Besides the technical indicators that do lead me to believe we will see a pretty ugly Q4, there are also some fundamental indicators that are pointing to the same thing. And the first thing here that I do want to bring your guys' attention to is a potential black swan event for Bitcoin that we did warn about a while back. And this has to do with Mt. Gox, a very old crypto exchange that was hacked about 8 years ago. Users lost about 137,000 Bitcoin in total. And just recently, Mt. Gox has actually regained these funds and been approved to refund their customers. So that means that within the coming month, 137,000 Bitcoin, or $3 billion worth, could be dumped back onto the public markets. Obviously, as some of these people have had their Bitcoin locked up for 8 years, they will be up a substantial amount, will most likely want to take some profit, and this will create a ton of selling pressure for Bitcoin. Now, the other thing that is creating selling pressure for Bitcoin is the miners themselves, as they're really getting double screwed here. And the first thing that's really hurting them is the rising cost of electricity, which really does make it more expensive to mine Bitcoin. And the second thing really hurting them is just the price decline of Bitcoin, which also makes it less profitable for them to mine Bitcoin. That is why we have seen these Bitcoin miners selling a ton of Bitcoin over this year, as they're really just doing it to keep afloat, to pay off their debt, as at the moment Bitcoin mining is not profitable. And if energy costs do continue to go up, and if Bitcoin price does continue to go down, that will create another downward spiral event that will force these miners to liquidate their holdings. So definitely something that I am keeping an eye on in the near term. Long term though, you guys know I am a massive Bitcoin bull. I am a huge believer in crypto, and I really like this tweet because it does help to put things into perspective. So these are the 10-year returns on some of the most influential assets, including Bitcoin, Tesla, Nvidia, all of the FANG stocks, the S&P, and gold. And Bitcoin in the past 10 years has returned an astounding 225.6,000%, with Tesla coming in second here, not even close at 15,000%. And then in second last here, you got the S&P returning 200% and gold returning 7.8% in the past 10 years. So if there's ever any gold maxi you come across that tries to tell you that it is better than Bitcoin, just show them this tweet of the 10-year returns and see what their reaction is. But suffice to say, this is why I remain long and strong on Bitcoin, and I will be using any short-term negative catalyst or FUD as a buying opportunity. Now, one potential negative catalyst that I have been keeping my eye on, that I have been updating you guys on regularly here, is the Tornado Cash situation, in which the U.S. Treasury Department sanctioned Tornado Cash, and in response to this, Circle blacklisted all Tornado Cash ETH addresses, effectively freezing the USDC in these accounts. Now, this sets a terrible precedent and does leave a lot to be worried about as a crypto investor for the future of our security and privacy on the blockchain. But I am not surprised whatsoever that Circle is really doing this, as we all know they really want USDC to become the future central bank digital currency of the United States. And to do this, they are going to suck up the regulators to try and get on their good side. So Circle went ahead and blacklisted all these Tornado Cash ETH addresses. I believe it was about 45 addresses that were blacklisted. We also know that some decentralized applications like Aave did follow suit, freezing Justin Sun's account, the founder of Tron. And we've also seen another decentralized application here in the form of Uniswap ban about 253 wallet addresses as part of its effort to abide by US sanctions. And we did warn a couple weeks back that Circle could potentially just be the first ignition that really spreads the wildfire. And now it is not just the centralized companies like Circle. Now we even have decentralized exchanges like Uniswap going ahead and banning wallet addresses to really just sort of stay on the good side of the US sanctions. This is really not a good look for the future of decentralization. And we have really discussed multiple times on the channel that decentralization itself in crypto really is a myth for the most part. A lot of these apps that do claim to be decentralized are in fact very, very centralized, and this does just serve as proof of that. So definitely a very concerning move by Uniswap here. Now, one piece of news that did pleasantly surprise me is the fact that Tether is actually holding firm on their decision not to freeze Tornado Cash addresses. Obviously, as Tether is the largest stablecoin provider in the world, I think it is very, very important for them to set this precedent that they will not be doing any freezes. However, this does come with a gripe, as they are awaiting law enforcement instruction. So they basically said here that they work very closely with U.S. law enforcement, and no regulator has made such a request despite their near daily contact. So definitely very interesting. And to me, it sounds like USDC may have not been ordered to. Rather, they just jumped the gun and did this to try and show the U.S. sanction that they are willing to do whatever they have to do to stay on their good side. And Tether does actually call them out on that here, basically saying that we believe that if made without instructions from U.S. authorities, the move by USDC to blacklist Tornado Cash smart contracts was premature and might have jeopardized the work of other regulators and law enforcement agencies around the world. We also spoke about DAI here, which is another algorithmically pegged stablecoin, the fourth largest by market cap. It actually has 36% of its reserves in USDC, so that is very concerning, the fact that DAI is actually supported by USDC, and even they did not proceed with any freezes following suit. So far it has only been USDC on the stablecoin side of things, and I really do hope it stays like that, because if the general crypto community does lose trust in a bunch of stablecoins, then we are really in for a lot of trouble, in my opinion, in the broader crypto markets, as at the moment stablecoins do make up about 10% of the total crypto market cap, right? Like between Tether, Circle, and BUSD, I think they make up about $134 bill of the total crypto market cap that is sitting just above 1 trillion at the moment, so about 13%. And if the broader crypto community does lose trust in these stable coins, that is going to be very, very troublesome for the markets indeed. Now, we got to talk about some massive adoption news here for Bitcoin from both Visa and MasterCard. But first, I do want to just bring you guys a quick word from this video sponsor. This video is brought to you by CRO Mars, a decentralized meta world which operates not only as a Mars metaverse of its own, but it is also attempting to bridge the gap between other metaverse projects for seamless integration. Now, we did do a deep dive on CRO Mars a couple weeks back, so definitely check that out if you would like. But since then, the team has made a ton of big moves, and the first thing that I do want to highlight here is his partnership with Voxel X Network, which is developing innovative tech platforms optimized for GameFi and the metaverse. And this definitely should help the CRO Mars team really accelerate those plans for the Mars metaverse game, which is coming soon, according to what the team has told me. And the other thing that I do want to highlight here are the CRO Mars NFTs, which are going to be integrated into the metaverse, as they have actually made a ton of announcements regarding these NFTs. So holders will now get a share in CRO Mars metaverse, and part of the revenue goes to NFT holders. They are also dropping an upcoming Alien Apes collection, which will allow for enhanced playability within the CRO Mars upcoming pod racing play to earn game, integrated as playable avatars with exclusive access to VIP areas on CRO Mars. NFT owners will be whitelisted to purchase land exclusively before the public sale. So suffice to say, these Alien Apes will be packed with utilities, and they are going to strive to deliver on all of these integration milestones. And once the entire collection is sold, one owner will be receiving a $5,000 prize. So with a very limited supply of only 730 NFTs, the odds are definitely not bad at all. So once again, thank you to CRO Mars for sponsoring this video, and I will be keeping an eye on this project as they do continue to make moves in the Cronos verse. So hopping back into the news here, we can see that Visa did announce they were launching a prepaid Bitcoin card in Brazil that also pays back in Bitcoin rewards, and MasterCard is now working with Binance to enable Bitcoin and crypto payments in 90 million plus stores. This is massive news in terms of adoption. Now, you guys should know where I stand on using crypto as a payment method, and the bottom line is I don't. I think crypto is an investment in technology of the future, and I think Bitcoin is a massive store of value. I will gladly take any cash back in Bitcoin, but I will not spend a single dollar's worth of my Bitcoin. However, the matter of fact is that a lot of people do want to spend their crypto. A lot of people do see it as a currency, and that is why just launching visas like this, whether it is coming from Visa or MasterCard, and having them available at so many merchants worldwide, is really just going to really foster that adoption and growth of crypto. And that's what we want. We want the general public to become more aware of crypto. We want it to be integrated into their everyday lives, and this is definitely a big way that it is going to happen. So although I do not agree with spending any of your crypto as a currency, it is still very bullish news for the broader markets. And we also got to talk about the Ethereum price here and what could happen following the merge. Now, we do have some traders anticipating higher prices in the $1,850 to $2,000 range in the lead up to the merge. Personally, I think that the macro outweighs the micro, meaning that if the dollar keeps ripping, if the stock market turns over, if inflation continues to go to the upside, I do not think that the merge is going to have any positive impacts in terms of price. But I am very, very bullish on Ethereum long term following the merge. Once again, I am not trying to day trade this merge. I just know that after the merge happens, after the supply shock does occur, that it is going to be incredibly bullish for the future of Ethereum. And this thread does a great job of really breaking it all down. So if you are not so sure why the merge is bullish, just listen to this. So essentially, the merge is being referred to as the triple halving, as it is equivalent to 3 Bitcoin halvings, okay? We're going to see the annual emission of new ETH drop from 4.3% down to 0.43%. That means we drop from 13,000 new Ethereum a day down to 1,300. That is massive. That is a daily reduction in selling pressure of $21 million at current prices, which is equivalent to more than $600 a month. $600 million a month. That is insane. Plus, as we are switching over to proof of stake, it is basically going to reward people for locking up your Ethereum and restaking it to earn more interest, not to mention EIP 1559, which is Ethereum's perpetual burn mechanism. So if we had proof of stake Ethereum for the last years, we would have burnt around 1.9 mil Ethereum in total. Rising demand plus falling supply equals higher prices. And that is why I am not trying to day trade around the merge, because I know that in the coming months it is going to be incredibly bullish for Ethereum, and I am definitely looking forward to the merge finally taking place, which is set to happen in mid-September. And in some more bullish news for Ethereum here, we see Coinbase actually adding support for Coinbase wrapped staked Ethereum on the Ethereum network. So this is an ERC20 token, and basically Coinbase is now offering their very own liquid staking solution for Ethereum. So if you have staked your ETH on Coinbase, you're going to receive the CB ETH in return, which does give you the option to sell, transfer, spend, or otherwise use your staked ETH while it does remain locked. So this basically gives investors who staked their Ethereum on Coinbase the option to actually do something with their Ethereum, but this can only be sent via ERC20. Do not send this asset over other networks or your funds will be lost. Now, the other thing that is important to note here is that it is not meant to track Ethereum's price one-to-one. It represents staked ETH plus all of its secured interest from staking, starting from when CBE's conversion rate and balance were initialized on June 16th. So effectively, this means that as your ETH is staked on the platform for longer, CBETH should actually gain versus Ethereum, as it is actually going to represent your APR that you are receiving for your ETH 2.0. So instead of actually receiving ETH 2.0 in passive income, your CBETH here is going to gain value versus Ethereum, which is similar to a lot of other liquid staking protocols. I am not surprised here, as Coinbase once again is very centralized. Ethereum is very centralized. JP Morgan owns a ton of critical Ethereum infrastructure. They're working with Coinbase. Coinbase is working with BlackRock. You just connect all of these dots, and it makes a lot of sense why Coinbase is offering this liquid staking solution for Ethereum. But regardless, it does remain bullish. And now that we are talking so much about the merge, I do want to take a quick second to actually address what this means for Polygon over here. As there obviously, I have heard some people saying that after the merge, Polygon will no longer be needed, sorry, and that, blame the jet lag, guys, and that is not the case, okay? In fact, the merge is only good news for Polygon. So the merge is going to reduce energy consumption by 99.5%. However, it is not going to fix the gas fees or the speed for Ethereum. Vitalik did outline a 5-phase plan for the merge, and phase 1 here has absolutely no impact on speed or gas. It is only for the energy efficiency as well as the actual reduction of issuance. So it is good for the tokenomics, it's good for the energy consumption, but we're probably not going to see Ethereum fix a ton of the problems with their gas fees and their speed until like even later down the line, like maybe another 3 or 4 years down the line, which means that Polygon will still remain an essential scaling solution for Ethereum by lowering gas fees and increasing speed. In fact, the Ethereum Foundation specifically said, and I couldn't find this quote, so I'm actually happy that Polygon was able to find it, because I know they did state at one point that the Ethereum ecosystem is firmly aligned that a layer 2 scaling solution is the only way to solve the scalability trilemma while remaining decentralized and secure. So the merge prepares ETH for future upgrades like sharding that will help it grow and scale, but Polygon will still play a massive role in supporting Ethereum. The Ethereum Foundation is sort of leaning on these layer 2s to continue focusing on decentralization and security, and letting these layer 2s do a bunch of the work in terms of the gas fees and the speed. So Polygon will still remain incredibly relevant even following the merge. I am still very bullish on Polygon, although I do not currently own it, and if we do see another capitulation or big sell-off phase in the markets, I will potentially be looking at opening a very big position in Polygon relative to the portfolio. Now, we also got Polygon here announcing a partnership with GameSwift to build a Web3 gaming ecosystem. Yet again, another reason I am so bullish on Polygon. They have massive partnerships, including Facebook, Reddit, Stripe, and now they have GameSwift, which is actually creating its very own Web3 gaming ecosystem, aiming to enable the mass adoption of Web3 games. And they are entering a strategic partnership with Polygon to begin setting up its innovative ecosystem, leveraging the Polygon Edge technology and zero zero knowledge proof, aiming to become the one-stop shop for games and gamers looking to get involved in Web3. So definitely very good news indeed. You guys know GameFi is a sector of the blockchain I am incredibly bullish on. That is why I am very bullish on the Cronos and everything they are doing with Cronos Play. And so I'm not surprised at all to see Polygon actually hopping in here and getting involved in GameFi. Now, we also want to talk about AVAX real quick. This is a layer 1, a direct competitor to Ethereum, and it has just hit a new all-time high in terms of transactions at 32 million this month. And the reason I do believe this is happening is because of the Avalanche subnets. Subnets are completely unique to Avalanche. They are the main reason I am so bullish on this layer 1 and its future. And I really just want to break this down, like exactly what they are, because I think that a lot of people are really sleeping on the potential of the subnets. So right off the bat, this article is surrounding the state of Avalanche subnet gaming. So we already got GameFi here. As you guys know, I am very bullish on it, like we did just discuss. But I really want to talk more so about what exactly subnets are and why they are so powerful for businesses and developers to build on. So they are basically a way of utilizing different sets of Avalanche validators to create brand new instances of the Avalanche blockchain. Each subnet is within the main Avalanche chain, but they have their own validator set, their own gas currency, and their own security. So quite simply, these allow games or other decentralized applications to leverage the existing Avalanche infrastructure and easily spin up their own blockchain environment tailored to the needs of those specific users. This means that businesses can choose to actually make their subnets public, open source, private. They can customize their subnet to whatever they please. And what you're going to notice here is that each subnet does have their own validator set. Well, guess what you need to run a validator node on Avalanche? You need 2,000 AVAX. So that means that every subnet is open, needs to be powered by 2,000 AVAX that is locked up permanently while the subnet is running. So that is very bullish for the tokenomics of Avalanche and very enticing for businesses to go ahead and build out on AVAX. So for Web3 gaming to succeed sustainably in the long term, it must achieve the fluid user experience we see in traditional games today, and there are two elements that are not negotiable, including the high scalability and low gas fees. We saw the massive loss of Ethereum here when more than 157 million in ETH was burned and wasted as users piled in. People were paying upwards of $7,000 in gas fees just to go ahead and mint the other side NFT land over here. And Avalanche subnets are scalable because, as mentioned previously, each will have its own validator set publishing transactions specific to that subnet only. So if user 1 was playing game A on subnet A and user 2 was playing game B on subnet B, the network would not have to share the same valuable validator resources to confirm and publish transactions. This would be done in completely separate environments. And once again, Avalanche subnets really do help for customization, for gas fees, and that is why you can see these 32 million transactions being done on AVAX last month, which is a new record, but it does not have a massive impact on the speed or on the gas fees. So this is why I remain incredibly bullish on AVAX. I really still think a lot of people are sleeping on subnets, and I think they're going to be very integral to businesses moving forward. So very, very interesting indeed. Now, we did have a very good piece of news here from crypto.com, and that is some additional security approval here. So they have completed the SOC2 compliance, and this latest certification further positions crypto.com as the most secure and reliable virtual asset service provider. Now, I find it funny because I feel like a lot of people don't really care about security in bull markets when all these centralized exchanges are running. But now that we have seen the impacts of a bear market, we have seen unsecure exchanges get hacked or go insolvent. I think a lot more people are really focusing on the security of these exchanges. And in my opinion, this is just incredibly bullish. It does show you that crypto.com is here for the long haul, okay? They are not here for quick money. They are not here just for this bull run. They are here for future bull runs. They want to be that one-stop shop for all of your crypto needs. They have been building out that regulatory approval. They have been getting more licenses, more security types, just a whole ton of things to really bolster out the platform, demonstrating its best-in-class security and data privacy practices, which will also be incredibly important moving forward. So once again, a very good move here for Crypto.com, and I remain incredibly bullish as they do continue to get this regulation, this compliance, these security audits, and I really do believe this will become the largest crypto exchange in the world. Now, one competitor here is FTX, who has actually received a cease and desist letter from the FDIC for false and misleading statements. And this is basically specifically regarding how these exchanges like Voyager were basically saying they were FDIC insured in the case that something happened to Voyager, but that is actually not the case. FDIC insurance only works if something happens at the bank where Voyager is holding their money. Now, FTX here basically made a similar claim, and the FDIC did slap them with a cease and desist letter. It is important to note that this is specifically for FTX US. FTX is a global exchange, so it's not going to impact their business worldwide. It could lead to some short-term problems in the US though, which is definitely very interesting because Sam Bankman-Fried has been doing all he can to suck up to these regulators, and it would appear that the FDIC does not care, and they did actually slap him with this letter for these misleading claims regarding FTX's insurance. Now, we also got to end this off talking about Voyager and Celsius here. We have been updating you guys on these two exchanges, as really, to the best of my knowledge, these are the two largest exchanges that did actually halt users' withdrawals, effectively locking up their funds. Now, there has not been too much news lately. Things have been pretty quiet, but we did receive a ton of news over the past couple of days. And for starters, we see that Voyager has been approved to pay up to $1.9 million in bonuses to retain employees. So they can't even return their customers' funds, but they're talking about shelling out just under $2 million in bonuses to their employees. And rightfully so. This really did upset a lot of Voyager creditors who are now objecting their firm's plan to reward key staff. They also note here how throughout the bear market, some of their competitors like Coinbase, Bitpanda, BlockFi, Blockchain.com, and Crypto.com, as well as Gemini, have laid off their staff. However, even after initiating bankruptcy proceedings, Voyager still has 350 employees on payroll. And now they're talking about actually giving them bonuses to give them incentivization to stay, which is definitely not appropriate considering the situation that Voyager is in at the moment. I really want to see them prioritize their customers here and get them their funds back for real. Like, stop worrying about your employees. Worry about your customers who have had their funds locked for over a month now on the platform. And we can also see here that there are some big players here basically that are looking to buy Voyager. We know that FTX was looking to buy Voyager, but Voyager snapped back, basically calling out Sam Bankman-Fried on his lowball. Apparently, Coinbase was going to make a bid, but did back out. And now Binance is on the table to actually go ahead and buy Voyager's assets out. This would not surprise me whatsoever. Binance definitely does have a strong balance sheet, and I will be curious to see if they actually do go ahead and acquire Voyager's assets. It definitely would be advantageous for Binance. They could probably go ahead and get it at a lowball offer. Now, the bids for these Voyager's assets are due September 6th in a sale process taking place through its bankruptcy case. An auction, if needed to pick a winner, would follow on September 29th, and Voyager's digital native coin Voyager surged more than 40% after this news was reported. However, this still will take quite a while. A lot could change in the meantime. I will be curious to see who does end up acquiring a Voyager. And the way it does look right now, I don't believe that Voyager is going to exist in the next bull run. It looks a lot more likely that they do actually get bought out. And at this point, I don't care if Voyager exists or not. I just want everyone to get their money back. So if you're watching this video, if you were impacted by these withdrawals being halted on Voyager, Celsius, or any of these other exchanges, I do sincerely hope that you get that money back very, very soon. That is rightfully yours. And on that note, I hope you guys did enjoy the content in today's video. I will catch you all in the next one, and I love and appreciate you all. Peace out for now.